Metro Vancouver's real estate market might finally be finding its footing here, but don't get excited just yet. With the June data that we'll be going through today, sale pricing is down 3% year over year. And when it comes to inventory, we're 40% higher than the 10-year average. And despite thousands of listings on the market here, around 17,000, we are though seeing some signs of life. So whether you are a buyer or seller, we're going to go through all the June data to help you with your due diligence and your fact finding and understand, is this just a pause before another drop, or have we started to see a shift in the marketplace? As we get to the news release here for the month of June from the Greater Vancouver Realtors, I wanted to start right at the top. And it states, after a turbulent first half of the year, home sales registered on the MLS across Metro Vancouver are showing emerging signs of a recovery, down 10% year over year, having the decline seen last month. And that's what I really noticed when I saw the data here on a month-to-month basis for the month of June, and just how much inventory has really plateaued and had very small increases month over month. In Vancouver East, in the attached segment, it was the one only segment here in Vancouver where we saw a little bit of a drop month to month in inventory. But essentially since December, we've had nonstop pretty substantial gains in inventory. And now we're starting to see this flat line, and we're going to go into those charts there as well. Andrew Leese, who's a commentator here and an economist that I refer to a lot, he states, on a trended basis, signs are emerging that sales activity is rounding the corner after a challenging first half to the year, with a year-over-year decline in sales in June having the decline we saw in May. He continues, if this momentum continues, it may not be long before sales are up year over year, which would make a shift toward a market with more demand than the unusually low demand we've seen so far this year. And I can see that in terms of the day of recording here on July 4th, the last 2 weeks, there's been a substantial pickup in terms of the market. Some of my listings that have been quite flat have been receiving showing requests. One, we have an accepted offer hoping to remove subjects on it today, and that was a property that's been on market since October. And even for my buyers, a lot of buyers coming out of my database, getting them plugged in with mortgage brokers and starting to get accepted offers and subject removals on the buy side as well. So I've seen a huge pickup for myself in my business. I'm not sure what the catalyst is here, if people finally are confident in terms of their buying position, because there hasn't been a lot of changes in terms of the economic landscape. I do know that there are buyers that are securing very strong deals right now, and there is really good opportunity out there. But I still am trying to figure out what this catalyst is coming from. Even from my YouTube channel here, we just onboarded 2 people from Chicago who are coming out this way. I had to reach out from someone from Dubai who's planning to come out here in Vancouver. So this has all been very recent, and it has been interesting. And we can see that the data does reflect the activity that I've been seeing in the last couple of weeks. As we move down the release here, you can see that in terms of overall active inventory, there were 6,315 detached, attached, and apartments properties newly listed for sale on the MLS in Metro Vancouver in June of 2025. That represents a 10.3% increase compared to the 5,723 properties listed in June of last year. And this is 12.7% above the 10-year seasonal average. So again, not a surprise. I mean, we know the data, we are very high in terms of the inventory, but the real crux of this data is showing that inventory is starting to stall out. The total number of properties currently listed for sale in the MLS system is 17,561, a 23.8% increase compared to June of last year, and a 43.7% above the 10-year seasonal average. And I know that not too long ago, we surpassed the 16,000 mark of active listings that the MLS hadn't seen in many, many years. Now we're getting closer to 18,000, but we didn't pass that 18,000 mark, and that was something that I was watching for, and we can see that obviously that did not happen, which is a good thing for this market. Across all detached, attached, and apartment property types, the sales to active ratio for June of 2025 is 12.8%. So that's in balanced market conditions. Anything between 12 and 20%, you're in balanced market conditions. What does that mean? For every 12 to 20 homes out of 100 are selling, and that's where you get that ratio of 12 to 20%. So that's a pretty fair market for buyers buyers and sellers. If you fall under 12%, you're in buyer market conditions. Above 20%, you are in seller market conditions. So we're just in that balance mark. And when you see by property type, the ratio is 9.9% for detached homes, so buyer market conditions, 16.9% for attached, and 13.9% for apartments. So out of the three category types for the Greater Vancouver board here, the attached market at 16.9% is the most competitive, but it's just in balanced market conditions. And then for detached homes, you are in that buyer segment. Andrew Lees continues on. He says, as home sales regain their footing, inventory levels aren't building as quickly as we've seen lately. Most market segments remain in balanced market conditions, which has generally kept prices trending sideways since the start of the year. With over 17,000 listings on the market right now, and with mortgage rates down around 2% since last summer, buyers are enjoying some of the most favorable conditions seen in years. When we go to pricing here across the board, we can see that across Metro Vancouver, the benchmark price across all segments on average is $1,173,100, which represents a 2.8% decrease from last year and a 0.3% decrease month over month. We're going to jump into the Vancouver downtown graph here, and you're going to see that in December, and this is the red line that I'm talking to you about in regards to inventory. December, we were at 786 units. We've jumped to June to 1307. So not quite a doubling, but pretty high inventory levels, the highest that we've seen in quite some time. But you can see from May to June, there was only a pickup of 10 units, where, the January, February, March, we were starting to have pretty significant increases in inventory. But from April to June, we really have started to see a bottoming out of inventory, and it's likely showing that there's really no more properties that are going to be coming to market. We know that this is the most amount of selection people have had in over a decade, and at some point it's going to bottom out, and it's starting to look like signs that it has. And when we look at these pricing charts here, and this is going to be a little bit different, these numbers that I just referenced from the board, these are median. The ones that we refer to at the top is similar to a consumer price indexing method, the home price index. So the numbers are going to be a little bit different, but similar. But despite all this inventory surge since December, you can see that pricing has just trended up and down like a yo-yo. There hasn't been some big divergence despite the massive amount of inventory that we've seen. In the downtown market right now, when we're talking about where to purchase, we know that buyers' best bets, homes between 1.5 million to 1.75 million are really beneficial. That's a soft market. And with seller best bets, selling homes in the West End, Yaletown, and one-bedroom properties are the ones that are the most competition right now. In the downtown market, we're sitting at 11% sales ratio, which is just in that buyer's market conditions, with Cole Harbour being the softest at 7%, and then the downtown market at 9%. The West End and Yaletown are just in balanced market conditions, sitting at 14% and 12% respectively. If you're looking for some potential options in terms of a price band that would be quite beneficial in the downtown market, 1.5 to 175 is at 4%. Sales ratio 175 to 2 million is at 6%, and that 125 to 1.5 million is at 8%. So essentially, if you're looking downtown right now, the price band that you're wanting to be within is between 1.25 and $2 million. And then likely in that Cole Harbour or the downtown markets, if you're looking for best bang for your buck. If you're a seller, in the West End, and if you're a more entry level price point in and around that 700,000 range, there shows to be some competition there as well. As we work into the detached segment on Vancouver's West Side, again, 9% sales ratio, so we've highlighted that already. Buyer market conditions on the West Side, if you're looking for something extremely soft, we know that Mackenzie Height, which is quite a popular place in the past, is sitting at 4%. And, Kerrisdale, Kitsilano, Marpole, all in single digits, Southwest Marine and Shaughnessy, single digits as well. So there's a lot of opportunity on Vancouver's West Side to get a good purchase. And you can see that a reason for that. And when we go to the inventory, we can see why the sales ratio is what it is. It's almost been doubled since December, going from 486 units to 779. It's teetered off a little bit here, just with 13 more units coming to market from May to June. And when we go to the pricing, you can see that in August, that was the high point, 3.79 million, your average detached property on Vancouver's West Side. It's now dropped down to 3.29. So a $500,000 drop. So if you're looking at value on the West Side, this is definitely an area that you should be looking at in terms of that space. Going down to the West Side and condos and townhomes, this one is a little bit different, where we've actually seen 2 consecutive months of a price increase in the attached market. So this is both condos and townhomes. April, $900,000 average price point. It's now at $977. And when we look at the inventory, it was at 666 units in December, and then 1136. So a big increase in inventory since the beginning of the year, but it's kind of flatlined here. We've been in this 1100 range for 3 months now. So it looks like we've kind of capped out on that inventory. And despite inventory being what it is, we've had 2 consecutive months with pricing going upwards. Vancouver's West Side, 17% condos and townhomes. So balanced market conditions. There are some hot spots. Kitsilano at 29%, Mount Pleasant 36%, Oak Ridge 24%, Kilchina 26%. So there are a couple sub areas here on Vancouver's West Side where it's in seller market conditions. The low point in terms of getting some value, South Granville, South Cambie, and Dunbar are very low, single-digit buyer market conditions. So there's some opportunity in there as well. And then if you're looking for a soft spot as the entry point, anywhere between that $1.75 to $2.25 million mark is quite soft, single-digit considerations as well. As we get into Vancouver's east side here in the detached, we can see if we start with the inventory, December 412 units, jumped up to 693, but now from May to June, we only saw 9 units come to market here. So another flatlining in terms of the inventory cap, and pricing has actually stayed quite high. It hasn't really dropped too much. In June of last year, it was just under 2.1 million. Now we're at 1.864. So, over the last 13 months, there's been a drop, but we've stayed pretty much flatline in this marker since October of last year, despite the inventory going up. And balanced market conditions here in the detached segment at 14%. So if you're looking for more bargain and you have the capacity to do so, and I know I have a couple clients that we've been looking at some areas just on the west side, there's some good value around Douglas Park, some of these other areas that you may not have opportunities to live in because of these market conditions right now. So there's some good areas to look in and focus in on for sure. Similar to the attached market on Vancouver's west side, there are several segments here on Vancouver's east side in seller market conditions. 29% in Mount Pleasant, definitely leading the charge. Knight Street, 24%. And in terms of getting some value, Fraserview 6% and South Vancouver at 7% would be the opposite ends of the spectrum here for sure. In terms of price bands that you kind of want to take advantage of if you're a buyer, anywhere from 2.5 to 3.5 is very soft. Keep in mind, and I've prefaced this before, there's a lot of land assemblies going along, especially in that Collingwood area where it's really elevating the price point and why there's a ton of inventory. And that's why you can see Collingwood is at a 6% sales ratio right now. And finishing this out here, when it comes to condos and townhomes here on Vancouver's east side, 18% sales ratio, so strong balanced market conditions, and we've seen a huge increase in inventory from December, 385 units to 757. But again, the same story as the previous areas. From May to June, there was only 12 units that came available, and it looks like we're starting to cap out on that inventory, which is good. If you're looking for some areas as being a seller, there's many areas here that are in seller market conditions. Grandview Woodland, Hastings Sunrise, Killarney, Renfrew. All of these areas here are quite firmly planted in seller market conditions. There's not too many areas here other than Main Street at 5% where there's a big divergence in terms of the polarity. But with all these numbers, you can still be in an area that is selling really well, and there can still be a lot of good value. There's a lot of people who are financially strapped. There's a lot of people that are going through being leveraged, and mortgage renewals coming up. So despite seeing some of these numbers here, you still need to do a little bit of digging. It's not a blank slate in terms of seller market, buyer markets. You still can get value in both of these segments. Finally, as we get into price bands to take advantage of, 1.25 to 1.5 million in the condo and townhome in Vancouver's east side, you have 64 inventory with just 5 sales. So that's definitely a price band you'd want to take advantage of. The remaining price bands are actually quite competitive here. So that is what I have for you here. So if you are wanting further information, conducting due diligence, make sure you book that discovery call with me. It's in the QR code below or in my description. There's also some home buyer and home seller blueprints in the description below as well that you can get a free download for. So till the next one, this is what I have for you for this month's market update. I'll see you later.